Okay, let's dive right in. Because right now, the market is telling a story, and I promise you, most people are reading it completely wrong. We're about to uncover a hidden shift that's happening right under our noses.
See, there's this powerful current moving just beneath the surface, beneath all the noise, and it's pulling huge amounts of money in a very, very specific direction. If you're not paying attention, you're going to get caught on the wrong side of this tide.
Now think about this for a second. While most of us are glued to the same handful of popular, trending stocks, the big institutions, the smart money, they're quietly making their moves somewhere else entirely. They're not just setting up for the next big rally. No, they're setting the perfect trap.
And look, this is much more serious than that. If you misread what's happening right now, you're not just leaving a little money on the table. You are literally volunteering to be the person who pays for their profits.
You become what's called exit liquidity. It's a cold, brutal way of saying you become the person they sell to at the very top, right before the price comes crashing down. You're the last one holding the bag. And that is exactly what we are here to avoid.
So what is actually going on here? Most people see the market in two simple ways. Either it's a bull market where everything's going up, or it's a bear market where everything's going down. But right now, it's neither. And this right here is where most people get completely lost.
We are in this controlled sideways grind. And honestly, this is by far the most dangerous phase for retail traders. Why? Because the normal rules, they just don't apply. Breakouts look so promising, and then, poof, they just fizzle out. Rallies reverse sharply out of nowhere. It's a market that feels like it's designed to chop you up and shake you out.
And that's the crucial question, isn't it? In a market like this, only the smart money wins consistently. And it's because they aren't trying to guess the next breakout. No, they're using this quiet phase to position themselves for the next big move. They're not chasing, they are accumulating. So how do they do it?
They use a strategy called sector rotation. This right here is the single most important concept you need to understand today. Money isn't just vanishing from the market. It's being strategically pulled out of weak areas and quietly, carefully funneled into strong ones. If you learn to see this rotation, you don't need a crystal ball. You just need to follow money.
So let's do exactly that. Let's put on our detective hats for a minute and follow the trail. Where's the smart money placing its biggest bets right this second? The data is screaming three sectors that are showing clear relative strength, which is just a fancy way of saying they're crushing the rest of the market. And those are Midcaps, PSU Banks, and metals. Now, this isn't some random collection. Each one of these is a clue.
Let's break down these clues. Money flowing into midcaps? That tells us the big players are feeling confident enough to take on a little more risk. And when PSU banks start moving, that is a classic sign of institutional money. These are huge banks that need massive capital to move, something retail investors just don't have. But here's where it gets really interesting. Metals.
What's so fascinating is that the metals sector is often a leading indicator for the global economy. A huge surge here suggests the biggest players aren't just betting on India, they're positioning themselves for a worldwide economic recovery. They're placing a global bet, right from our own backyard.
And this changes everything. Because for all that money to rotate into these strong sectors, it has to be pulled from somewhere else. So which incredibly popular sector is secretly being sold off right now, setting up the biggest trap for uninformed investors?
Stay with me, because this next part is what genuinely surprised me when I saw the data. This is the single biggest warning sign in the entire market right now.
The IT sector, yep, the one place that has been a retail favorite for years. But the price, the charts, they're telling a completely different story than what you're probably hearing on the news.
And here's the trap, in plain sight. Retail thinking is to buy the dip in these famous IT stocks, right? Hoping for a big comeback. But smart money is doing the exact opposite. They are selling the rally. Every small bounce you see is being used as a chance for them to unload their shares onto eager buyers. The chart shows clear breakdown patterns, which is a technical way of saying the price keeps failing to go higher and is set up to fall. This is not accumulation, this is distribution. Large players are quietly heading for the exits. If you're watching this right now, drop a comment below and tell us, were you aware of this, or did this surprise you? We genuinely read every single comment. Also, if you're getting any value from this, just tap that like button right now. It takes 1 second, and it seriously helps this channel reach more people like you.
Okay, so we followed the money flowing in, and we followed it flowing out.
Now let's put it all together into one simple, clear picture of the entire market. This is your new cheat sheet.
Here it is. This is your new market map, and it could not be simpler. On the left, in the strong column, metals, PSU Banks, Midcaps. This is where the wind is at your back. In the middle, you have your neutral sectors, like banking and pharma. They're just stable, waiting for a clear signal. And then on the right, the weak column, IT, FMCG, and realty. This is where you need to be extremely careful. This is the map the smart money is using right now.
So now that we have the map, the big question is, how do we actually use it? How do we stop fighting the current and start aligning ourselves with what the big players are actually doing? Well, it really comes down to 4 simple but incredibly powerful rules. 1. Buy strength. Focus only on the sectors where money is flowing in. 2. Avoid weakness. Just stay away from the sectors where money is flowing out. I don't care how cheap they seem. 3. You get in before the breakout is obvious to everyone else. And 4. You get out before the hype becomes mainstream news.
And this is the real psychological shift you have to make. Success in this market isn't about working harder to find some hidden gem in a weak sector. That's like trying to paddle a canoe against a waterfall. It's about simply being in the right sector and letting the current do the heavy lifting for you.
And that really is the ultimate takeaway here. You can do all the analysis in the world, but if you're late to the party, it counts for absolutely nothing. Identifying these rotations before the crowd, being early, that is how you truly get ahead.
A quick but important disclaimer. I am not a CB-registered investment advisor. Nothing in this video is financial advice. All information is purely for educational and informational purposes only. Please do your own research and consult a qualified financial advisor before making any investment decisions. That said, if this video gave you even one new idea or insight, do us a favor, hit that like button below. It genuinely makes a difference. And if you haven't subscribed yet, what are you waiting for? Hit subscribe and ring the bell so you never miss a video. We're putting out content every week that you do not want to miss. Seriously, subscribe. You'll thank yourself later. See you in the next one.